Hello everyone, this is AJAY SHAH and you're watching AJAY's Costing Concept Last Minute Revision. We are here to record or we are here to teach a special series on last minute revision for your exams, that is Key to Exemption series. 60 slides, 60 marks, that is what the series is meant for. So today we are recording for one of those important chapters, that is performance measurement and evaluation. One of those chapters which was not in old syllabus of advanced management accounting but has been purely bought for new syllabus, so it becomes very important for you to read this or to go through this chapter. It is again one of those chapters where average 30 marks has been asked from first 4 attempts of CA final papers, and that is the reason again it holds a very important place in the examination hall, and that is the reason why we are recording this series and we are covering that chapter. So let us start with that. The first thing what we are starting with is a responsibility accounting. See, there are two types of responsibility accounting under performance measurement and evaluation. That is what responsibility accounting is like. Who shall be the responsible? Accounting of responsibility shall be given to the management, divisional heads, divisional managers, and that is what responsibility accounting is. It is not about accounting means and passing a journal entry of accounting in your books, but it is taking responsibility of their centers. That may be a cost center, profit center, revenue centers. So what centers that you have been running off and who shall be responsible? Your main role should be a collection of data, summarizing that data and reporting the financial information about its impact, about your decision makings or about your targeted goals, achievements and all those stuff. In that responsibility accounting, there are two kind of organizations. One is functional organizations and another one is divisional organizations. Now where there is a single product, we go for functional organization, right? So a single product of a company has a function of functionality. On the basis of functionality, the organization has been divided, that is like revenue or sales or purchase, kind of cost management, those kind of functions. You have functional budgets, what you read in your CA inter level. That is what is covered over here, functional organizations. The second is division organizations, where there are more than one product. We divide those divisions, we put a division wise, we do a calculation, evaluation and measurement. That is where there are multiple products, we use divisional organization. Both the organization has level of organization, that is what we decide. And in that level of organization, there are four kind of organization centers what we have. Number one is cost center, revenue center, profit centers and investment centers. So you may be held responsible for the cost centers, depending on what are the costs that you're incurring, what are the budgeted costs, what are the actual costs, what are the costs to be incurred, how the variances are, what are the variances, why we have variances. Those kind of responsible accounting is to be given. A very important part that we need to understand in responsibility accounting, you need to remember, is that number one, the responsibility accounting, those who are given head or those who are the managers or those whom the responsibility given, he should be responsible for that. First thing. Second thing is that whenever responsibility accounting evaluation is done, you should only evaluate for those performances which are under that manager or the responsibility accounting person who are. So those centers or those factors which are out of his control should not be measured in his terms. Say for example, a purchase team, right? A purchase team purchases a product at 80 rupees due to market rate fluctuation, though the budget was of 100 rupees. That means that purchase team has saved for 80 rupees, and you cannot say that their performance is good because there is a saving in 20 rupees. Actually, we cannot say it is a saving because of the efforts of the divisional managers of the team. It is because of market fluctuation which are not under his control, and that is the reason why that case responsibility accounting, that manager should not be considered, that evaluation or that performance measurement should not be considered because of this scenario. Your responsibility accounting manager should be held only responsible for those factors which are under his control, and only under his control should be considered, not outside his control, right? The second thing what we understand is the divisional performance measure. So now there are two kind of divisional performances measures: financial measures, non-financial measures. Financial measures are divided into four categories. One of them is return on investment category. Now let us understand, once I give a responsibility accounting to the managers, what we do is we evaluate their performance. To evaluate their performance, to check their output, to know their measurements for their performance. There are two measuring standards: financial measuring standards, non-financial measuring standards. First, what I'm discussing is financial measuring standards. In financial measuring standards, there are four methods. The first method what we are doing under over here is return on investment method. This method expresses what? This method expresses profit as percentage of return or employed in a division. So if I do an investment of 5 crore rupees in a business, and if the profits are 50 lakhs, this method represents that there is a 10% return on your investment, and performance is evaluated on the basis of percentage returns on the investment, that is capital employed or assets what you have blocked in the under this method. One of those very good methods and important method, because a lot of time practical questions, small practical question, case study questions might be asked in the examinations. Second method is residual income method. This method expresses in the profit that what company has earned in form of amount and not in form of percentage. So when you are recognizing or when you are calculating on the basis of percentage, it is return on investment method. When you are recognizing on the basis of amount, it is residual income method, where you are measuring your income, that is what it is, and net profit earned by an organization, that is what you evaluate. So over here we do not evaluate what is the amount of investment, what is the percentage of return what we are getting on the investment, but we evaluate how the performance is on the basis of net profit earned by the company. The third thing is EVA, very important. Economic value added is NOPAT minus working capital, cost of working capital into capital employed, what we considered. It is one of those very important methods, understanding this, because a lot of time a lot of questions has been asked on this method in examination. It is a measurement of economic profit. It measures that what is your NOPAT. NOPAT is your profits after taxes, right? So your non-operating profits after tax, whatever your profits are, and those profits out of that, what is your weighted average cost of capital and what is your capital employed. So on the basis of the capital employed, weighted average cost of capital is calculated. That is what you already done in your finance in the IPCC, and on that is subtracted from your NOPAT to understand what is the value addition that economically the company has been achieved or a company has given. Considering the same economic value addition, we have shareholder value added method. It is the method where we do discounting of future cash flows at substantial cost of capital. So this is also something what you've done in your finance in your CA Inter. Like, so what we do over here is on the basis of future cash flows, we discount those cash flows on the basis of working capital, that is cost of capital what we have, and we measure that what is the net revenue today what we are getting, how is the benefit that we are making today, and how the shareholders are valued or they have been given. So these are the four methods of performance measurement on the basis of financials and financial measures. Now coming to non-financials measure. Now divisional performance, non-financial measures, we have again, there are various non-financial measures what we have. The first one is triple bottom line measure. Now see, understand, a company may not always evaluate their managers or divisional performance only on the basis of financial figures or reports. Say for example, sometimes financial measurement what a company does may go wrong. How it may go wrong is that you are expecting a profit of 20% in the organization, right? But due to the market flow, due to the market survey, or due to the market conditions, or due to your competitors not working properly, or whatever the may be the reason, you earned a 25% market profit. So that doesn't mean that financially you have done something very good. You might not have done financially very good, but due to the circumstances it has played a role, and that is the reason why that financial measure would not amount to be a good performance measurement or evaluation funda. Secondly, company not only thinks only about finance every time. There are various other factors like social factors, economical factors, those in environmental factors, customer satisfaction factors. There are various factors which are also involved to understand that it is not only financial measurement which should be helpful, because a lot of times financial performance gives a short-term growth, short-term benefits, but non-financial measures like customer satisfactions, like there are a lot of products where you read that it is not been harmed to the nature is not harmed, it is eco-friendly products. So those increase the goodwill, those make sure the gesture of goodwill has been, and company gets a long-term benefit of those products. One of them is triple bottom line. Triple bottom line, when you're comparing only a financial measure, it is known as single bottom line. But when you're comparing other than financial measures, there are triple bottom line measures, that is environment, that is social and economic. There are three factors which are to be considered: environment, social and economic. It is also known as 3Ps, right? So that factor what plays an important role over here. We also have a case study in our material on this triple bottom line, and we have already referred this. Triple bottom line is one of those very important to understand, that it focuses on economic, environment, that how is your impact on the resources, what are the resources that have been impacted, what is the air, water, pollution. So that would be cost way higher compared to the cost what you're incurring in your organization. What is the impact on social, about your corporate governance, like employment, like feeding those, or like making sure that your organization, the output of that organization or the surrounding of the organization is socially, you develop them. CSR also you call it as. And maintaining finance is again economic role what we have. Another one is linking CSF and KPLs and corporate. So corporate social finances, or KPLs, we have key performance indicators and all those stuff what we have. Those you measure with the corporate. So you have a corporate vision, corporate strategies, CSF goal to be achieved, whatever our goals are, that is to be achieved, and KPI are to be, key performance indicators are to be achieved, so that your indicators of your performance measurements or evaluation should also be considered. One of those important is balance scorecard. So basically there are 5 models in non-financial organizations, like triple bottom line. Balance scorecard is the second one. Balance scorecard has a dimension into 4 dimensions. Like the balance scorecard focuses on the 4 dimensions basically. Why 4 dimensions? Balance scorecard says that there should be balance, right? When I'm teaching this in class, or when I'm already discussing this, we have already given an example to all of our students, that you going to school and only making sure that you get a first rank or second rank in academics is one of those criteria to judge you, or one of those criteria to know your performance. But there are various other criteria, like your absenteeism, your socialism to the other students, or your participation in the sports, your physics activity, or your homeworks, and all other factors. So those evaluations are also as important as what your marks are, and that is what balance scorecard focuses on. So balance scorecard is focusing on 4 dimensions. The first is customer, the second is learning and growth, the third is internal, and fourth is financial. Balance scorecard talks about customers, that is what is your rate of investments, what are your returns, what are your expectation, how the customers have been satisfied. The first thing that we should focus is the customer satisfaction. What is your delivery, how the delivery has been done, what are the margins that you're earning, how the customers are satisfied, do you have a customer complaints, what is the after sales services. And that is where it focuses. It says that it should not be only a financial measure that you should also observe, but you should also observe what your customer satisfaction. That is one of those important. Second is learning and growth. That is what you make sure that innovations are observed, you make sure that you learn well, you grow accordingly, you make sure that your team training has been given to your team, you also go through that. Your internal organization employees have a good growth in the organization, and that would make sure that your employees have a very good that they would be very happy, motivated to work in the organization. The third thing is internal business. Every time you think of new innovations, new techniques, internal growth, what you do, every time making sure that there are some or the other benefits, like Kaizen costing what we have seen, like such kind of value engineering what we have seen, such kind of small changes and internal growth what you do. That is also one of those very important to know your evaluation. Finance is anyways a monetary terms what you go. So it is not only about financials, but it is also about learning, making sure that your employees, your organization, other stakeholders get a growth, as well as your internal business organization or a business perspective techniques take a good growth, as well as customers are satisfied, their rate, what are the returns, what are sales service, and all those stuff. We have a case study, that is a Paper Solutions Limited when it comes to triple bottom line, and Fair Limited when it comes to balance scorecard in our case study material. That is one of those important case studies to go through this important concepts. Next what we have is non-financial measure is performance pyramid. Now it is a pyramid. It is the third what we are talking about. The shape is of pyramid. There are, what happens is there are 2 operations over here. One is internal and one is external. So what happens is, what performance pyramid talks about is operational efficiency. It talks about effectiveness and efficiency. Now what is exactly the effectiveness and efficiency? Understand that performance pyramid says that there are the way we work, the organization works, and the way effective and efficiency has been brought, that will give us our performance measurement and performance pyramid. So the first thing is the external factors and the internal factors. From what do you expect from the internal factor? We expect that there should be less wastage and less process time. So there is an operation at the bottom line. How the operation should work? Internally, you should have less wastage, and secondly, less process time. There should be less process time, less wastage in the organization, because of which your customers will get a good quality, good delivery. The moment your customers gets, that is external factors what we are talking about, good quality and good delivery, you will reach to customer satisfaction. See, it is a pyramid that has been developing, right? So first thing is operations at the base. Then there are four things to focus. There are two, that is internal, external and internal. Externally, what should happen? But first, internal, what should happen? In internal, you should have the process time should be low and there should be less wastage. When the process time is low, there is a less wastage. You get a proper delivery to the customers and you get a quality. If you are able to deliver them a quality as well as what a proper time delivery do, they get a customer satisfaction. Once the customer gets satisfaction, your productivity will increase because of low wastage and low process time. As there is a low wastage, low process time, the productivity will increase, customer satisfaction externally would increase, and they would become more flexible to adopt your product. As and how they become more flexible, customer satisfaction increases, we get a good market. So we get a market growth, and as and how there is a market growth, what happens is we achieve our financial objectives, and that is what a corporate vision is at the top. So at the top, there is a corporate division. Corporate division wants two things: financials from your end, that is internal end, and externally they want market. To achieve market, you should have a customer satisfaction, and your customer should be flexible, as well as the internal organization should also be flexible enough for the customer satisfaction and the productivity. When you will achieve the productivity? When there is zero wastage, that is wastage is lower and the process time is lower, so that externally you will be able to deliver quality and delivery of the product to the customer level. So this is what performance pyramid talks about. Now the next one is building block model. When there is this building block model, I have explained in my class that performance is in the service sector industries. I have explained this in the form of giving an example of articleship, which I will discuss over here also. So building block model, Fitzgerald and Moon introduced this building block model. They made sure there are three dimensions in this model. The first is standards, dimensions, and rewards. What are the standards? The first thing is equity, achievable, and ownership. Now, what are the standards? Equity. Whenever there is something work assigned to you or work assigned in the service organizations, right? There are multiple service organization fields what we have. Say for example, in a CA field, there are various articles you have, employees you have. So whenever there is a work assigned to them, it should be a standard work that it should be assigned. Whoever has been assigned to the work, it should be, first of all, equity should be maintained in the organization, right? Like it should not be that only two people are working and other are sitting and other are all working, and it should not be so. The equity should be maintained. Second thing is, whatever the work is assigned, it should be achievable, right? Setting faulty standards, wrong standards, non-achievable targets will demotivate the people in service organization. So you should have equity in the organization. That is the first thing of standards. Second is it should be achievable, and third thing is ownership. Ownership means responsibility. Whenever I am assigning some work to my articles or my employees, I should make sure that equality is maintained between them, and ownership is also been given to them, that they can take, or their forces can be applied to make sure that ownership has been achieved, so that they would feel that it has been their job, their task, their responsibility. So they should be held responsible for that, and accordingly they should be given the task. So this was the first dimension. The first dimension talks about standard. Second thing is the dimensions. Now dimension has two things. The first thing is determinants: quality, flexibility, innovation, and resource utilization. So you should, once the work is assignment to you, you should be determinant enough, you should be giving a quality work out of this, as well as you should be flexible enough to do your work. You should be more and more innovative. You should be making sure that you get innovative ideas to do the work, to make sure it has been easily done, completed on time to time basis, check basis is done, and you should properly utilize your resources. So when a work is assigned on a standard format, making sure that there is equity, ownership is transferred, achievable targets are given, what are your responsibilities, then you fall under the category of dimension. Under that dimension, you should be determinant enough, you should be quality, service should be provided, flexibility should be observed, innovation should be done in the work, like Excel, PowerPoints, articleship if I talk about. So you should be very much innovative to use those technologies, terminologies, and you should properly, effectively utilize your resources. Once that is done, your results are being achieved. After that result, your financial performance is being observed, as well as your comparative performance has been checked. So what are your financial performance, how have you worked, what are the benefits that you have done, how it has been worked out, how is what expected. Competitive performances, checking your with the own competition, how it's been done with the team, what other papers have done, how are they performing, what is your role with them, how have you been performed, and all those dimensions are done. Once this is done, the third dimension talks about rewards. What are the rewards? You should, once after checking the results, your financial performance and your comparative performance, you should be given rewards. The first thing is reward should be given in a controllability manner, right? They should be clear. Second thing is they should be clear. A clear cut instruction of reward should be given. And the third thing is such reward whichever are given, they should be motivative enough. So we already have a case study on this of grab and go, right? So there is a case study of grab and go for this, where we have discussed in our material about this module. Three dimensions we have, three diversifications we have: standards, dimension, and rewards. Standard should be equality, should be maintained, the work should be achievable, and ownership should be given. When it comes to dimension, you should be first of all determinant enough, flexible, you should be more and more innovative, your resource utilization should be done, and you should have a quality work. On the basis of this, results are performed, results are measured financially and comparative basis. Third thing is reward. While giving reward, it should be motivating reward, controllability of the reward, and it should be much more clear. So we did with triple bottom line, we did with balance scorecard, then we did with performance pyramid, building block model, and the next one, the fifth one, is performance prism. This is where it will focus on all stakeholders. Why was this performance prism introduced? That balance scorecard focuses mainly on stakeholders of customers and the company's management or company stakeholder. That is why it says that financial and customer satisfaction, the primary balance scorecards pillars, what we talk about after those four pillars. Performance prism says that you should focus on all stakeholders. When we are doing this case study of performance prism in my class, I have already mentioned that something what balance scorecard, something what performance prism said, that they criticized balance scorecard on the basis of that all stakeholders are not progressively observed, or they have not been considered. Performance prism says that all stakeholders should be considered. First thing it says that what is the stakeholders contribution, whether it be employees or equity holders or preference holders or customers, whoever they are all stakeholders, creditors, debtors, all are the stakeholders of the company. Stakeholders doesn't mean that those who own the company. Those stakeholders means those who are benefited or participative, or those people or those organizations which are in mold with the company. Those stakeholders, what are their stakeholders satisfaction, right? Once you know, come to know that what are the stakeholders contribution, what are their capabilities. On the basis of capabilities, you decide your strategies, your processes to make sure we achieve shareholders our satisfaction. So first of all, what you understand is what will be they contributing, how will you do the process, how the strategy should be formed, and what would be their contribution or capabilities. On the basis of that, you decide a shareholder satisfaction. That is was performance. So we have done a Galaxy limited of case study in our material on this, and this is a prism what we followed. Then what comes is benchmarking. Now what does benchmarking say? That benchmarking we already heard about. Benchmarking is something where you are putting some standards. So it involves comparing a firm's products, services, activities against best performing organizations. So in the field of say for example classes, or in the field of charter accountants or any manufacturing product, which are the best organizations, you benchmark yourself, you compare your product, your activity or service with them to go have more and more improvements, more and more evaluation, innovation in the organization. What are the types of benchmarking? Competitive benchmarking, internal benchmarking, external benchmarking. You do is benchmarking is you set your standards for comparative. What was your previous standard, how have you been your current standard, how have you been performed, what was your backlog, how the performance has been done. Second thing is internal benchmarking, you do in the internal organization. External organization benchmarking, you do strategic benchmarking. What was the strategically term that you have used, how it was used, and now how it has been playing a role. Or what are the functional benchmarking, how the functions were performed, how now they are performed, what are the functions that you will be performing, how the organization is improving that, what should be the goals, what should be standards, how they are followed. Then what we have is global and process benchmarking. What is the process that we have followed and how the process has been followed. Now categories of benchmarking are group benchmarking, inter-industries benchmarking. Group benchmarking talks about group of companies in the same industry. They form a group, they have a benchmarking system, they have a standards where they compare their own performance in the whole industry, in the same industry. That group decides which company is doing better, how they have been performing, what are their scores, what are your scores, how the performance is, how the evaluation, how the categories to be checked. Inter-industry benchmarking is a competitive interest in the similar process are identified. Inter-industries, there are two kind of industries what we have. They like logistic is one of those similar processes what we have, right? Inbound logistics, outbound logistics. So you compare what is the process that they have been identified and you participate in the benchmarking exercise, how the process should be. Basically this is all about internal controls or internal standards what we have. Process SAP is what we call a CA final student might be knowing in his articles. You would have learned is you understand the process SAP is that what should be the process, how it should be evolved, what are the benchmarking process, how the company is performing on those process, what should be the standards and all those organizations. Then what we talk about is process of benchmarking. So the first thing of the process of benchmarking is planning. You plan out how the benchmarking will be done, what are the factors that will be relevant, what are the data that will be relevant, how the company will have this benchmarking process. Second thing is you collection of data and information. You collect those data, you collect those information after the process planning has been done. Once the data has been collected, once the information has been collected, then what you do is you analyze the findings, how it was, what is the process, how has been done, which were the factors which has to be considered, what are the factors to be considered. Then on the basis of data you put your recommendations, what are achieved, what are not achieved, why they are not achieved, what were the benchmarking process, where we were lacking, what were our standards, what are the outputs that we have achieved. And on the basis of recommendation you motivate your team and you review them and you motivate that next time how the benchmarking process is achieved, what are the outputs should be achieved and how the benchmarking process should be done. Benchmarking code of conduct is principle of legality, principle of exchange, principle of use, principle of confidentiality, first party contract, third party contract, and preparation. So these are the code of conduct. How the benchmarking you should have a principle of legality should be very exchange when you are when there are group benchmarking has been done or inter benchmarking, you should exchange the information. You should make sure the proper code of conduct is followed. You should principle of use, how the data has been used. You should not use in some of the another way where it would harm or where it would be where the competition or where the competitive companies or the data shared would get leaked. This should happen. A confidentiality should be maintained in that data collection benchmarking process or whatever the output is. You should have first party contract, third party contract, and accordingly you should prepare a benchmarking process. That is one of those important part to understand. The next thing is need for performance measure, NPO, non-performing non-profit organizations. How will you perform there? So in this case you cannot say that, see, whenever there is a profit organization you calculate their financial measures, like as like balance scorecard has performance prism said that what are the stakeholders contributions, stakeholder satisfactions. So in this case you may perform, you may check your financials also, but when it comes to non-profit organizations there is no financial considerations over there, there are no financial measurements over there. So how would you performance there? So benefits cannot be quantified. You cannot quantify those balance benefits, what have been they achieved or what are the benefits that they have been achieving, as we do not know what is the financial figures over there. Secondly, benefits accrue over a longer run or a longer term, like social work you do or you do some non-profit organization, your benefits occur on a longer run, short-term benefits are not achieved in over here. Thirdly, your measurement is in the utilization of funds and expenditures. So basically you utilize the funds and you do the expenditures on those utilization and expenditure, whatever you do on those basis your measurement is done, that where it was utilized, how it was utilized. But again, whenever they're utilized or whenever the organization works on that, you cannot, benefits cannot be quantified. And thirdly, there are multiple objectives, like there are, like when there are non-profit organizations there are multiple objectives. Some objectives are serving them, feeding them, giving the services, customer satisfactions, all those kind of multiple factors which plays role. So for them you cannot implement something like non-performance measures of balance scorecard, because balance scorecard says there should be a financial, customer satisfaction, internal growth. You cannot do that. So all those performance measurements what we do, like balance scorecard, performance prism, performance pyramid, building block model, they cannot be implemented for non-profit organization, because non-profit organization, when it talks about, when we are talking about their benefits is longer run. First thing, you cannot quantify the amount, or you cannot quantify those in figures, as well as you measure them on the basis of utilization of fund and expenditure. So there is no question of financial measurement like rate of return, investments, residual income, EV or SVA, like that. And there are multiple objectives involved in that. We have also done a case study on this in our material about non-profit organizations material. Their measurement in NPO can be on the basis of value for money. So what is the value for money? What the services that they will be providing, whether it is effective, it is economic, it is more efficient or not, whether the efficiency has been achieved or not, whether they are effectively utilizing it or not, or whether economically they have been making sure that it has been like a lot of times, a lot of things what we observe the news, what we read is that NPO, what they were not more effective, they have not utilized the fund properly, they have not considered time value of money. So considering all those factors, they should be concerned the value of money, that is maximum output with the minimum input, that they should be achieved in their efficiency. You should have a maximum output where your input should be minimum. Effectiveness is desired missions and objectives should be achieved with your effectively they should be achieved, and it should be maximum quality with the lowest cost. It should be economical. That is what it has been observed. Then we have this adopted BSc like customer finance internal, that is balance scorecard. You can adopt it. How you can adopt is you can go for customers finance innovation learning process. So every time you do this NPO activities, every time we should have a clear cut vision of what are our objectives, whether they are achieved or not, what are the growth that we have learned compared to the past, what are the finance involved with it, is a lower cost, are we getting a maximum benefit of this, maximum quality has been achieved or not. And we have a case study of silver cents in our material. Those who are our students, they have already gone through this. So silver cents, one of those important case studies for non-performance measurement in NPO. See, I would focus one more thing over here, and I want to tell this that all these 5 models what we discussed, NPO what we discussed, like triple bottom line what we discussed, balance scorecard what we are discussing, performance prism, performance pyramid, NPO, all those discussions what we have done, building block model, make sure that all the case studies what we have given in this PPT, or what we say that in this last minute revision key to exemption, those are very important case studies. And as I always say in my class, whenever I'm recording my lectures, whenever we are teaching in the class, I'll always say that this chapter is the best way to revise this chapter is you go through this key exemption, these charts, and go through the case studies. The case studies in our material are designed in such a way or been drafted in such a way that there you will first understand the whole model, whole concept, why we need to implement this, what are the expectations of management, what the services that has been expected, how would you implement this, all those answers are being given in the case studies. So if you observe, as I said, Fair Limited, Galaxy Limited, what I said, refineries, what I said, silver stands, all these case studies which are given in our material are very important when it comes to this chapter. 30 marks on an average has been what is considered from this chapter. It plays a very important role. This is what a last minute revision session what we recorded, like on the previous day of your exam, how would you revise? A quick revision of this chapter, that would be helpful. So what I would suggest is saying that once you do this chapter, once you do this, once you attend, or once you're watching this on YouTube channel or on the lectures, make sure you go through the case studies after going through this, so it becomes more easy for you to understand, to read the questions, and to how to provide the solutions. As I say, CA final is not only about making sure that you answer practical question, theory question, it is also about application of this kind of models and suggesting the management or MDs or what kind of questions, like what they expect from in the case studies. You give your inputs, you give them suggestions, advisory, consulting. That is where it is very important to go through the case study what we have marked over here. Right? With this, we finish revision of our this chapter, but it is one of those very important chapters for you to understand, to you to revise. Please make sure you go through this. If you have liked this video, if you're learning this, please hit the like button and subscribe to our YouTube channel, as well as in the description below we have also mentioned the link where you will be able to get this last minute revision. You will be able to download the file and would be able to read it. That is also available, or you may visit our website and download from there. It is also been provided. Thank you so much. All the very best. Thank you for watching.